Welcome back. And in our top business story, consumer prices in Abu Dhabi rose 1.6% for the year in August. Latest data by the Statistics Center Abu Dhabi showed yesterday. Again, food prices were the main driver of this increase, as were non-alcoholic beverages, as CAD said. The highest increase was in meat prices, which rose 14%, followed by coffee and tea. However, prices for clothes and shoes fell by 13% compared to last year. On a month-to-month basis, between July and August, average consumer prices rose a marginal 0.1%. And looking at the first 8 months of the year, inflation stood at 2.4% compared with the same period in 2010. High demand for oil and gas, as well as the increasing need for cheap transport of goods and services across the region, will boost the amount of money invested into the Middle East railway networks. The GCC countries are set to spend over $100 billion on setting up modern rail networks, it says in a regional publication. For instance, the UAE's planned 1,200-kilometer-long Etihad rail, which will connect the UAE to Saudi Arabia and Oman. The $11 billion project will ease the flow of goods and resources across the emirate. It is due to be completed by 2017 and will help strengthen the emirate's position as a magnet for international logistics. Or take Saudi Arabia, it will spend $25 billion on 3 mega projects set to ease the transport of people and goods across the kingdom. Speaking of Saudi Arabia's Kingdom Holding will complete the due diligence process for its bid to buy a 25% stake in telecoms operator Zain Saudi by the end of September, Kingdom said in a statement to the Saudi bourse on Saturday. Kingdom Holding, which is controlled by billionaire investor Prince Al Walid bin Talal, together with Bahrain Telecommunications Company, are bidding $950 million for the stake in Zain Saudi. Back in March, Kuwait-based parent company Zain agreed to sell its stake to the 2 bidders. This announcement comes after Batelco CEO Peter Kallioropoulos told Reuters this week that the deal was still weeks away from completion. Gulf shares fell today on concerns Europe's policymakers won't be able to stop the region's sovereign debt crisis from growing and after oil prices retreated. With that, let's now look at the stock indices across the GCC. World business news. The group of 7 finance ministers vowed to support banks hit by the slowing economic growth. Also, they promised to take all necessary steps to ensure the resilience of their banking systems and financial markets. Current events underscore the need for a concerted effort at a global level in support of strong, sustainable and balanced growth, the finance ministers and central bankers said during their meeting in the south of France. Meanwhile, IMF chief Christine Lagarde said on Saturday that reports of a draft IMF document showing a €200 billion shortfall in European banks' capital were misleading and that the IMF was still finalizing its global financial stability report. Worries about whether banks needed fresh cash have deeply unsettled financial markets in the past week, putting banking stocks under severe pressure.
There has been misreporting about €200 billion. And what I'd like to say is that this number of €200 billion, which is tentative at the moment because it's part of a draft document, not a final document, it is not a stress test that the IMF conducts, nor is it the global capital need for European banking institutions.
Speaking of recapitalization needs, France's largest banks by market value, BNP Paribas, Société Générale and Crédit Agricole, may have their credit ratings cut by Moody's as soon as next week because of their exposure to Greek bonds. 2 people familiar with the matter told Bloomberg. France is the largest holder of Greek debt in the Eurozone. French Central Bank Governor Christian Neuer, however, said the country's banks do not need to be recapitalized to make up for losses caused by the country's debt crisis and the fall in value of Greek government bonds. He again urged Greece to deliver on its debt reduction plan. Meanwhile, Greek Prime Minister George Papandreou said in a speech he was determined to do whatever it takes to meet commitments agreed with international lenders, save the country from bankruptcy and stay in the Eurozone. Frustrated by a slow housing market, more and more U.S. home sellers give up on finding a buyer for their property and instead put their homes up for rent as they wait for the market to turn. This has become a nationwide trend. Analysts cite negative equity, high unemployment, and hard to get loans as the main factors driving the surprising surge in single-family home rentals. Jeff Kelly, principal of Darien, Connecticut-based Kelly Real Estate, says many homeowners, in their despair, switch from selling to rental, even in locations where homes were easy to sell until now.
We're doing probably 30 to 40% more rental transactions in Darien. And the really interesting part of that is most of those homes are homes that, by anyone's memory, have never been for rent before.
Before we go, here's a quick overview of the oil, precious metals and currency markets. And after that, we have the day's sports news for you.